Hi there, Serial Trader here. Let's get right to the action and another enormous down day here on SPX. But that was kind of being telegraphed there. I remember on the ES futures, I was pointing out that a corrective pattern suggested potential for another leg down here in a fifth wave. Well, now that's certainly materialized, and we're looking at the SPX cash index chart here. And from this B or 2 high, you can get a pretty clear, mature looking 5 waves down now. Now I can of course extend a little further, but we are in some pretty extreme conditions. So I think we're right at that point where we're gonna have a very substantial bounce. Maybe tomorrow, but certainly if that doesn't materialize tomorrow, I would definitely be looking for it to kick into gear there next week. If we go look at the, I'll go through several things here, but obviously we have a very mature looking 5 down, 3 up, 5 down, so a nice 5-3-5. So far it just counts nicely as an ABC zigzag. It hasn't really gone far enough or aggressively enough. That might sound surprising as it has been aggressive, but just the overall pattern itself so far doesn't look aggressive enough for me to consider this being a 1, 2, 3, 4, 5 to the downside in progress. We've only gone a little bit past the AC equality relationship. That came in at 25.93. The 1.382 extension of A off of B for C would be 23.87, so we haven't quite gotten there yet. But even that, that's starting to get into the qualifying relationship for a third wave. But if we reverse here pretty quickly, then in all likelihood we just have this ABC down, and we should have substantial rally up from there. But even if it is a third wave, even if that's the case, and we complete pretty soon here, because again we do still have a mature looking 5 wave sequence, if it is in fact a third wave and it's even more bearish than it's already been, we'd still get a fourth wave. We had this correction up here in either a B or a 2. If it is just going to be a 5 wave sequence down and we're about to end wave 3, we'd still need the wave 4. So I think in either scenario you're going to see a big bounce real soon. And if it's the ABC scenario, it's probably going to be more than just a bounce. It might be the beginning of a new trend, but obviously we're not there yet. Not enough information to make any determination like that, but just going through the possibilities here, both of which imply a substantial rally quite soon, I would say. Now, if we look at the other things here, so again, we are diverging in a bullish way on hourly RSI, so bullish divergence. Obviously new lows in price, not new lows in hourly RSI. On the 4-hour chart, exactly the same situation. Lower lows in price, a higher low in RSI, so a bullish divergence. Daily chart, still a bullish divergence. Lower low in price, higher low in RSI. So all the technical conditions are there, suggesting that this is getting very near its end. Also, if I just zoom out here briefly, and actually, you know what? I'll go to a weekly chart just to show what I'm looking at here. So I have this trend line drawn from 2009, just connecting obviously the 2009 low and then the first major pullback. Okay, and very simple trend line, but that's basically the lowest the trend line could be. If you want to make it like this, which I don't think would be the right idea, but it doesn't change anything too much, and in fact I think it just pretty much puts us where we currently are. So if you do the trend line there, we're right on the trend line from 2009 as of today's close. But if you do the trend line like this, that would come into play. Let's see here. That would come into play roughly around 2400, give or take. So we're getting into some major long-term trend line support We also have the previous lows there of December 2018, and they were in at 23.46.58. So I'd say if we stab down a little more tomorrow, I'd be looking for some major support in that 23 to 2400 range. And even if we're going to go lower eventually in a more bearish scenario, I think you're going to get a big reaction there first. Oh, and also another thing. So now that we're looking at the weekly chart, so weekly RSI, let me just point this out here. Right now our weekly RSI is as oversold as it's been in a very long time. It's at 24.92, so under 25 on weekly RSI. Okay, now the week's not done, and obviously a big bounce tomorrow would reduce the severity of this RSI level, but currently weekly RSI at under 25. Now let's just zoom out and look at some historical examples. So throughout the entire bull run from 2009, we've never seen that level of RSI. Here in this pullback, we got to 29.67, so just under 30, and that was the second worst compared to the current one after our 2009 lows. Now, heading into the 2009 lows, we got to 16 on weekly RSI, but I mean that was a historic, 50% or so major financial crisis bear market, and the RSI on the weekly only got a little bit lower than we currently are right now. Also, going back to the tech collapse, so we had our 2000 tech bubble collapse starting in March there of 2000, and how low did we get on the RSI towards the bottom here in 2002? On the weekly we got to 20.52, so again slightly lower but still a similar level to where we are at right now. So this is extremely oversold level, and we're coming into some major long-term support, and also we have a very mature looking wave pattern. So far I'm considering this just a corrective ABC, and again I'll only go down the 1, 2, 3, 4, 5 route if it morphs into that, but we still need a reaction up here in either the beginning of a new trend or a fourth wave. So there is a big bounce coming quite soon. There's a lot of technical evidence pointing towards that, as well as historical precedent from getting to such extreme levels. Okay, so that's all I want to go through here on the wave chart for SPX. And if we go to the Thinkorswim candlestick chart, we're below all major moving averages, so none of those really matter right now. Close near the lows of the day. So likely tomorrow, ideally, we gap down a little bit, obviously open lower, and then start rallying back hard, and maybe even do a piercing or an engulfing candle. That would be or a hammer. That would be an idealized kind of reversal day, and that's certainly something to look for. Now, one thing that I've done here, so I've been pretty timid about trying to get back in here with any kind of aggressiveness. I've been doing some day trading, and that's been actually working out quite well, but you got to be quick. I mean, you get moves in 5 minutes that you never even saw an entire trading day on the futures right now. It's under normal conditions. It's incredible. So there's certainly opportunity there, but hard to have confidence for anything overnight with any kind of size. But given all that longer term stuff I was pointing out, I did open, let me bring it up here. I opened up some index puts, and no, I didn't buy them. I sold some index puts on SPX index options, and let's see what I did here. So the March 20th, 2020, so not tomorrow, but the following Friday expiration date, 2300 strike put, and I took in a credit of 66.30 per contract times 2 contracts. So the actual break even at expiration, so it's just no win, no loss position here. If at expiration in 8 or 9 days, whatever it is, we're sitting at, let me just dial this in here, around 23.30 or so, or sorry, 22.30 or so, and you only start losing at expiration after 22.30, and obviously the maximum profit is anything 2300 or greater at expiration. You take in that the max profit is just the credit you got for selling them. So basically my thoughts here are, even if the market drops a little more, say down to into the 2300s, 2400s, I'm pretty confident we get a big bounce there. And even if we don't, and we just kind of meander around there, that is still major support. I think the market will have to digest that area before it can drop much lower. But again, break even at 2230, so below the 2009 trendline support, below the December lows, before you even start losing on this position. And it's only a week and 1 day to expiration. So that's kind of my way of playing it. Obviously, ideally, we form a bottom in short order and start going up, and then I'll actually start looking at some, directional long futures or long calls, something like that. But for now, this is just kind of my timid way of saying, hey, implied volatility is super high. We have some major technical supports below us, so let's try and take in some premium selling those index puts. Anyway, that's all I did worth mentioning, other than some day trading, of course. But back to the charts there. Okay, so nothing to go through here. We have obviously a gap down. So now that we have several gaps above us, just like when we were rallying up for no reason, for 5 months straight or whatever it was, October to February, when we did that, we created all those gaps below us that eventually got filled. Well, now we're starting to develop several gaps above us, which are likely to get filled when we have a big reaction rally. So keep that in mind. Just another kind of check mark in the bullish camp here, at least on a short-term basis, that's kind of developing. Okay, so that's SPX. Dow Jones Industrial Average. All the charts look the same. Correlations are extremely high right now. You can pretty much throw a dart at a board of various stocks, and they probably all went down today. I mean, with few exceptions, but basically people are just panic dumping. No rhyme or reason, just complete fear. Oh, I got to raise cash so I can buy some more toilet paper. I think, at least on a short-term basis, they'll regret that kind of decision-making. But you have that mentality of just liquidation, no rhyme or reason. Doesn't matter how cheap something is or how expensive it is. Nothing matters. Just raise cash, raise cash, raise cash. Panic. That's what you're seeing in the market. And usually a panic accompanies a major pivot point and a tradable, in this case, low that we're looking for. All right, yeah, nothing to mention here on the Dow. Same idea. We have gaps above us now. Ideally, tomorrow, open a little lower and then have a big reversal. That'd be nice to see. NASDAQ Composite. Now, the NASDAQ Composite still hasn't done quite the same technical damage. And let me just get this out here. The NASDAQ Composite has not done the same technical damage as the other two indices. So on the Dow, I got to check back on the Dow there in a second, just to get this straight. Did we break the December 2018 lows on the Dow? Let me check. Yeah, we did. So the Dow is the weakest, and the Dow has broken the December 2018 lows, so that's significant. So the Dow is definitely the weakling of the three indices we're looking at here. But the SPX has not broken December lows yet. And the NASDAQ Composite is what I was looking at before I interrupted myself with the Dow. The NASDAQ Composite, we're quite far away still from those December lows. So the NASDAQ Composite is showing relative strength, again, to the other indices, which is somewhat notable because usually these high beta tech stocks are weaker, in these kind of market conditions. They fall more, and yet we're actually seeing relative strength with this tech-heavy index versus the other two. So that still has me leaning that we're just doing an ABC down and that we could have something fairly substantial follow to the upside afterwards. As crazy as it sounds, with all the panicking going on, you don't make money panicking. You usually make money buying into the panics, as history has shown. So just keep that in mind, kind of psychologically. Okay, that's what I wanted to go through on the NASDAQ. Yeah, again, multiple gaps above us. Certainly some nice targets to fill once we get our bounce going here. And the VIX. So the VIX, here's another reason I think that we're very close to a substantial move to the upside here. VIX is at some pretty high levels now. So we closed at 75.47, got as high as 76.83. VIX extremely high, extreme fear, extreme panic. And if I go back on this VIX weekly chart, let's do 20 years. I mean, the only time, let's see here. Only time in the last 20 years we were higher on the VIX than we are now was here. Let's see, that was October 2008. So right in the heat of the financial crisis. And VIX went to just under 90. And I gotta say, things probably looked a whole lot worse back then than they do now. All else being equal. So we're right there. We're at near financial crisis peak VIX. And along with all the other things I've shown, I think that makes a pretty strong case for a significant low, tradable low to be formed here quite soon. Okay, and you know what, just out of curiosity, if I go back, so let's just get myself on the daily here. Daily, 20 years. Let's just get the exact date. So this is the day that we went to, hang on there. Okay, this is the date that we actually went to the peak VIX in the financial crisis. And that was October 24th, 2008. So let's just go see what happened after that VIX peak there in October, what did I say, 24th, 2008? Yes, okay. Now I'll go down to the SPX chart. And let's go find October 4th, 2008. Okay. And scroll back here. And here, just bear with me. Okay, so here is October 24th, 2008. This is the day that the VIX peaked at almost 90, okay? And if you look, the very next day after that, we opened slightly, well, actually we opened up a bit, closed down near the low. So we made a marginal new low. But then the day after that, we did a huge, let's see here, it looks like a bullish engulfing candlestick. Closed at 848.92, opened at 848.92. Yeah, so we did a legit bullish engulfing candlestick, not the day after, but the following day. Bullish engulfing candlestick, and we rallied 1, 2, 3, 4, 5 days. And we did roll over again and go lower, but the fact of the matter was, at least on a short-term basis, that was a big buy signal, and you had a significant counter-trend rally before resuming down. So even in this financial crisis panic, with the highest VIX, in the last 20 years, 90, just about 90, that was still an excellent short-term buying opportunity as far as the trade went. So I just thought I'd go through that, just kind of a historical example of, what follows after you reach such a high level on VIX. Well, it looks like a significant bounce follows based off that example. Okay, so that's all I really want to point out there. Now on the VIX, VVIX tool, so no real signal yet here. Again, though, you have the preconditions for a signal forming. So we've obviously made a higher high in VIX. We have not made a higher high in VVIX. So you have this potential VIX, VVIX divergence forming. Obviously, you would need to get a move below the red moving average in VVIX, right? And you would have to get a move back above the blue moving average in SPX. But the way the market's moving, by the time you get a confirmed signal, which right now a blue moving average currently is at 27.66, but just tomorrow when we open it'll catch up quite a bit. you know, that's 200-300 points from current levels just to start to get a buy signal. So you can see the kind of preconditions forming. New high in VIX, lower high in VVIX, but you need to see things start to reverse, and then you have your buy signal. So no signal yet, but the preconditions are developing. That doesn't mean much on its own, but along with everything else I showed, I mean, it looks very probable that a short term, at the minimum, tradable low is about to form quite soon here. Okay, so that's all I really wanted to go through today. I'll certainly update tomorrow evening or over the weekend sometime after tomorrow's action, which should be interesting. We either get a big reversal day tomorrow or we have a little lower to get yet, but I think we're pretty close to finding a reversal point here. And I think I'll go ahead and do a Bitcoin update because some major changes today on that chart. I definitely need to go through that, so I'll do that shortly here. All right, Serial Trader signing off.